And what I wanted to do is take a few moments and talk a little bit about what's happening generally in the United States, a little bit about what happens in New York State, and then specifically what's happening in the upstate region relative to early stage investing. So if I can get this going. Let's go the other direction and see if that'll work. So let me start by just defining a couple things. How many people in the room know what an angel investor is? Okay, how many people are angel investors? Okay, basically we have three types of angels. One are individuals, people who go off on their own and they invest in companies that are either brought to them or individuals who they're aware of through their business networks. These are individuals that have $1 million in net worth, excludes their primary residence. They have $200,000 of individual income a year or $300,000 if you're married. SEC requires, the Security Exchange Commission requires this definition. You cannot be a formal angel investor in any organized way unless you meet this criteria and you can demonstrate that you actually are qualified. There also are groups. These are collectives of angels who invest individually. There used to be a group in upstate New York called TVAN, Tech Valley Angel Network. Once a month, the group got together over dinner. Individuals paid $300 to come in and pitch that group. They ate dinner, you pitched, you walked out of the room, and if somebody liked you, they would talk to you individually, and ultimately, you may or may not get funded. Tough way to do business, very hard process. Every deal was done individually, and so you might have 10 people investing in a company, invest different amounts of money, and do it in very different ways. Funds are collectives of angels where they put money in the bank. The Eastern New York Angels is one of those organizations. We went out and raised money and people wrote checks, we put it in the bank, and when somebody comes and pitches us, we can actually write a check on the spot without going to our individual investors and asking them to pony up money. So the top 10, this data comes from the Halo report, which is Silicon Valley Bank does this on an annual basis. Very interesting to note, I'll talk you through this. Golden Seeds is a New York State-based organization. They are physically located in New York City, but they have branches in California and in Boston. It's a women-only venture fund. They do angel investing all the way up to A-round investing. Over 250 women in this organization. In 2013, they were #1 in the nation in terms of investing. The year before, they were 5th. Tech Coast Angels, California-based group, #2, were 2nd last in 2012 as well. The Houston Angel Network in Texas is a new organization. You will see that there are a lot of organizations that are starting to form. Almost every one of these are angel groups and or excuse me, angel organizations. Golden Seeds is an organization where the network presents on a regular basis and individuals invest separately. Central Texas, we see down here, and we'll go through the list. New York Angels, very, very active in the New York City region, but invest across New York State. I've forgotten exactly how many members they have, but it's well in excess of 100. They meet on a monthly basis. They were #1 in 2012. They slipped to 7th in 2013. However, they are very, very active as an investor group. So you can see that there's a pretty wide geographic distribution. Surprisingly, California and Massachusetts, where we have a lot of investor activity, are not well represented there. And I think the reason for that on the angel side is that a lot of those folks still invest as VCs rather than angels. And the difference primarily is the amount of money that they invest and the process that they use to do that. Some basic statistics. In 2013, there were about 1,800 angel deals that were funded across the United States. The average size of an angel round over the past 3 years is about $600,000. What's interesting when we see companies, we generally ask them a couple of questions, and Les was right on the market, right on target when he talked about market, because so many individuals come to us and have no idea who their target customer is or how they're actually going to sell a product to them, and it surprises me no end. The second question I usually ask after I say who's your target customer is how much money do you need, and I always get generally the same answer, $1 million. And then I ask them, what are you going to do with it, and how did you come up with $1 million? And the majority of them cannot give you that answer, which is pretty surprising to me. But at the end of the day, over the past 3 years, about $600,000 is invested in companies as an angel round investment. This generally doesn't come to them in one fell swoop. They usually get it in tranches, and they usually are invested in milestone investing. So they might get 100, 200, 250, and they have to achieve a certain goal in order to get to that next level. And as long as they continue to achieve their objectives and move the company forward, they will continue to get invested by angels. At some point in the future, they will then require some big investments, and that comes into a venture round, normally over $1 million, sometimes in the $2 to $3 million range. That's when you're at market, you've got a product, and now you want to scale it. Angel investing really focuses to a large extent on pre-market or pre-revenue types of companies. In Q4, the average round was $700,000. I don't know if that's because of the nature of the market, and we're going to see in a minute where these companies are getting funded, or the fact that people have more money to invest. But at the end of the day, we are seeing a little uptick. The average round when co-investing with non-angels is $1.7 million. So when big money comes in, a lot of times you will see that there are more dollars that are put on the table, and venture investing really has a different tone to it. We did one investment in 2013 with a VC where we co-funded. They took a bigger piece of the apple. They took two-thirds of the investment. We took 1/3. But the reason we co-invested is that they were willing to take an A round once the company met their production milestones. Top 3 sectors: healthcare, the internet, and mobile. No surprise on mobile. I think everybody has a phone. And at the end of the day, there's just a lot of apps getting pushed out into the marketplace right now. And you can hear a bazillion stories about these companies getting funded for outrageous amounts of money. Recently, Facebook bought a mobile app for $14 billion. It astounds me because you could probably write that app on a piece of toilet paper when you're sitting in the John and has no market. There's almost no way to demonstrate back to me when I'm looking at those types of investments how you can really justify that type of investment, because the market will not sustain, I don't believe, the investment. However, it is a big opportunity, and I think people are enamored by the fact that mobile is out there, and it is a very, very large marketplace. The size of the rounds: healthcare on first round averaged about $1.6 million. I'll talk a little bit about healthcare in a minute. Internet, about $1 million on the first round, and mobile telecoms, about $1.1 million. The number of deals with co-investments are now 73%. So this is telling me that the big money is starting to come down a little bit into the early stage marketplace where they didn't want to play before, because they want to get involved in those opportunities earlier. And question?
So if I have a healthcare app that's accessible on the internet and my mobile phone, I'm golden.
You got $3 million sitting there. Yeah, and we talk about that because I think that a lot of times it really is trying to define that market and how it gets leveraged. And the average valuation is about $2.5 million. It's always surprising again to me that one of those questions I ask is how much you think your company is worth. And generally, without any product, without any demonstration of a minimal viable product or any thought about how you're going to get to the market, $5 million is the number I generally hear. A lot of times these are invested in the $1 to $1.5 million range. 2.5 is a company that's pretty far along, to be honest with you. Okay, deals in dollars. So if we kind of go through this, and this is not in kind of sequential order, but New England as a region, 11.3% of the deals, 14% of the money. You see New York here, 9.4%, 8.9% of the dollars. We are not really big in this marketplace right now in terms of investing. There's a lot of momentum right now in the New York City metropolitan area for apps. There have been a lot of angels and a lot of venture firms focusing their attention down in New York City right now. There are a tremendous number of incubators. A lot of them are focused on software applications. Skipping down here, you go to the bottom, you see California is still the biggest player, 18.6% of the deals, 19.6% of the money. The deals that are done there, we all read about them all the time, are very large compared to the average deal on the East Coast. A good size investment on the East Coast might be something in the $5 to $10 million range. It is not unusual to have something in the West Coast that is in the $50 million range. And so the money that's there gets leveraged very quickly, the networks get used in a different way, and the investments that occur on both coasts look very, very different in terms of the structure. So deals by sector. Internet, 38.5% of the deals. 34% of them are invested by angels, average $1 million. With healthcare, about 19.6% of the deals, 28% of it is angel money, 1.6 million average. And the reason for it on the average is because healthcare takes a lot of money to get there. I'll talk about one of the healthcare investments we did. Mobile, 16% of the deals, 16% of angel investing, about $1.1 million. And then software and energy. And then the rest of it is just a combination of a whole bunch of different types of industries. But you would think energy would be higher, and you would think software has been higher. They're starting to move up a little bit, but a lot of people have been burnt on energy. There's a lot of stories out there about energy investing and go, 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 and all of a sudden crash, crash, crash. And I think that people have shied away from it because they're hard to get out there in the marketplace. They take a lot of money, and angels can't really put enough money into these companies to actually get them to scale. Statewide, I want to just run through this. It's a pretty large network. There was an organization or a fund that was put together by New York State. I think it was mid-2013 or 12, and it was called Innovate New York. It was $50 million. They dispersed shares across the state. Some organizations got as much as $5 million on a matching fund basis. So here's a list of current angels. Can-Rock Ventures. These are early stage funded, focused in enterprise software and business analytics. If you go up to Innovate New York on the web, you can find more detail about these. So if you're in a geographic location and you're looking for potential funding, these were some folks that you may want to touch base with. Cayuga Ventures is located in Ithaca, New York. It started as an angel fund. They're in their fourth iteration. It is now a $50 million fund. However, they do early stage investing and later stage investing. They focus on high-tech companies, a lot of it coming out of universities. Excel Partners, located in Rochester, New York, is affiliated with RIT. They have a lot of things that are going on in Rochester, but the focus in Rochester is optics, and a lot of it's coming out of ex-Kodak executives. FF Venture Capital is located in New York City region. It's an early stage seed investing fund. I don't know a lot about them because I haven't had much contact with them. Golden Seeds, I mentioned. In order to get funded by Golden Seeds, I mentioned this is a women's fund. You have to have a women-controlled company. And so for us guys in the room, if we are 51% owners, Golden Seeds won't even talk to us. They do a lot of funding. They've had some great success on some of their companies. SCP Incubator Z80 Labs, located in Buffalo. The governor, over the last couple of years, has spent a lot of energy trying to help the economy in Buffalo. They have two programs right now that are of some note. One of them is called Buffalo Billions, where $1 billion of state money has been set aside to help startup companies. I'm not sure how to access that yet, and I'm not sure the people in Buffalo know how to use it yet, but at the end of the day, there is a program available to start to flow dollars out to Buffalo. The second thing that the governor gave them was $25 million for 5 years for business plan competition. $5 million a year for 5 years. The winner gets $1 million, which is for a business plan competition enormous. Most of them that we do around here in the state are $50,000 winners. They're currently soliciting for companies, and I think the only thing you need to do is be a New York State-based company in order to qualify for that. Stonehenge Growth Capital. That's
SCP.
Yeah, Z80 Labs. But I'm not sure Z80 Labs is actually running that question. Z80 Labs is 2013, we had 239 applications submitted to our fund. Half of those came from outside of the state, so we threw them away. The remaining 49.9% or so of those companies were screened by our screening committee, and of that group, we ended up doing due diligence on 12 companies, and we funded 2 of them. So, what is due diligence? It's a very deep dive into the company. Les mentioned some of the things before that are criteria. The passion of the entrepreneur. Somebody comes in and they're kind of lackluster. You know, here's my company. And, you know, if they don't have enthusiasm about it, we don't have enthusiasm about it, number one. Number two, who are you selling your product to? And it just, as I mentioned before, it stuns me at the number of companies who cannot, or people who come in and pitch you, who can't tell you who their target customer is. Their answer is generally, well, everybody can use this. Great. Well, how do you sell something to everybody? Unless you know who's going to buy it and why they're going to buy it, you're probably not going to get that thing launched. And so we go through a pretty deep dive. We look at IP. If it has a company that has patents, we'll dig into those. We want to look at the management team. We want to look at the product. And we really want to understand how they're going to get this product into the market. Are you going to do direct sales, channel sales, internet sales? How do you think you're going to get it in the hands of the customer? And then ultimately, what's your distribution methodology? If you have to manufacture, how are you going to put the product together and get it in the hands of the customer? So a lot of pieces that we look at to do that. I don't have a lot of data here, but I will tell you off of an organization called ENYA, which is the Upstate Venture Association of New York. They meet once a month. There's meetings down here in Mid-Hudson. You should look for those when they're here. It's a good place to get contacts. Some folks in this region have pitched at ENYA, and actually some of them actually have gotten funded. ENYA has venture groups. It has late-stage, early-stage investors, and it's a good place to make contacts. They track what goes on in New York State. There were 54 deals in the first quarter of 2014 that included debt and equity for almost $26 million. And so one of the things that always surprises me is everybody says, what's going on in upstate New York? And the answer is not much. Well, there's a fair amount going on. We just do a really crummy job about publicizing it. I can name 4 companies in the Albany region that have exited in the last 3 years, and none of them have gotten 1 page of ink, which is always surprising to me. We just had a company, Trio, which is a big data company, that sold in the high 9 figures to 3M. Wasn't even announced publicly. And so one of the things that's hard for early stage investors is to kind of get the enthusiasm of the community. And when people don't know that these types of exits occur, they think about the fact that I put my money in and I don't get anything back out for it. On the same token, young entrepreneurs need to know that there are successes out there, and the hard work that goes on, actually there's a reward at the end of the rainbow. So let's talk for a minute about Eastern New York Angels. We started in August of 2010. We did fundraising. We have 33 members. We raised $1.5 million. We have spent all of it on 7 investments. I'll talk about them for a second. But we're in the process of raising a $10 million angel fund, which is a very large fund. I hope to have that done by the end of probably the 3rd quarter of this year. We're actively in the midst of doing that right now. I've raised about $1.5 million from my existing members. I have some community folks who have come to me over time and said, if you're raising another fund, I'd like to be in it. And we're doing some institutional raises right now, and hopefully we can get to that number. We've done 7 investments. The range is 100 to 250. No one has gotten the 250 as a first tranche. They've gotten either 100 or 100.5 with a goal, a very specific milestone. Once they achieve it, they get the second amount of money, and that usually gets them either into the market or close enough that they can start to get their product out in front of customers. And that's really where we pick those companies up, pre-revenue investments. We do both convertible debt and equity. How many people know what convertible debt is? Okay, convertible debt is very much like your house loan. You have a certain amount of money that you borrow, you have an interest rate, and you have a term. We generally do 2 or 3 year investments. We usually do somewhere around 8% interest, And so we defer the interest and principal, and so at the end of that 2-year term, we'll convert our investment into stock. Why do we do that? Because we don't know what the value of the company is, and to be honest with you, arguing with an early entrepreneur about how much your company is worth when neither one of us know what it is just sets a bad tone. You start off in a kind of an adversarial relationship with a company who you want to live with and make money with. And so we just forego that and say, let's settle on some future value, and when we get there, we're all going to be happy. The 7 investments that we've made, 6 aren't NYSERDA funded. And why do I like the NYSERDA companies? Because they spend a lot of money getting the technology at the point that we can start to do some investing in it. So in almost every instance, the companies that we invest in have some product that is ready to go to market, and our dollars are used to grow the company and take the product into the marketplace. I have one bio company, very unusual for an early stage investment fund like ours to invest in a bio company. This company has a technology that they can go into a cell and they can manipulate the cell with some protein technology and turn certain attributes on and off. It's used for stem cell research. Very much like genetically engineered mice, they can do that in a cell. $8 million of federal money. We're the only investor in that company. We have 2 battery companies. One is called Paper Battery. They have a technology where they've basically been able to impregnate cardboard and make it a product that produces electricity like a battery. It actually is more like a voltage regulator, but it can control power it's being used to moderate the use of power in a cell phone. And the second one is a company that we're just finishing investment on. It's called Better Energy Storage Systems. That company has a battery technology where they have enhanced an anode where the performance is about 40% better than current anodes. They're able to charge faster, discharge longer, and has better performance. We have a waste heat recovery company that takes waste heat from smokestacks, converts it to electricity through some engineering technology that they developed. 2 materials companies. One of them is in the thermal electric space. They've been able to produce a thermal electric material that has about 25% higher efficiency, and they can do it in a standard microwave oven. We use a continuous flow microwave oven, but we're currently building a 18-ton manufacturing facility in Albany for that. The other material company we have is a company called Freeform Fibers. That company has a chemical process where they force, this is non-technical, force a gas through a tube. At the end of that tube is a laser. It converts that gas into a solid, which is a conductive material, which is silicon carbide, used by the military and used in aerospace, lightens airplanes by a phenomenal amount of weight, and at the same time produces higher efficiency on the conductivity of the electricity. And the last one is a lighting company that is a student-based company that we picked up at RPI, where they have taken a LED product and they now have the ability to kill bacteria, surface bacteria, with an LED light. They have UL certification, they have customers, and there's 3 people in that company, and that's pretty cool. Our sectors, healthcare, energy, and industrial, and so that's kind of our focus. You'll notice that when I put up the chart before of the angels, pretty much the types of investing they do is defined by the universities that are in that location, because those are primarily the technologies that are coming out. That's the end of my talk. I'm happy to answer